Hey everybody, welcome in. Welcome to my favorite part of the week. This is the IA weekly Q&A where I answer all your questions. Now, obviously the last 24 hours, in fact the last maybe 12 to 14 hours have been very bumpy, and a lot of you are concerned about what caused the Bitcoin crash and why it happened. So rather than name all the names of people that asked me questions about this, because there are so many, I'll just say from everybody who's concerned about exactly what happened with Bitcoin. So first of all, why did the Bitcoin crash happen and why did it go lower? Well, I believe there are many reasons. First of all, somewhere between 10 and $30 billion of high margin shorts were liquidated. We have dipped below the 50-day moving average, which is a big deal. And we're back to the April 7, 2021 levels, which is where we were a week ago. So again, don't panic. This is normal. This was, I think at most it went up to about 11% dip. Right now we're at 55.5K, so it's coming back slowly. Now, I believe, as usual, there are a number of reasons for this. One is the whale orchestration, and that is they wait, they sit, and they look at the long positions that are high on margin, and they just identify exactly how much they need to borrow, dump, hedge, short, just like I explained last week. And that's exactly what's going on. They wiped these things out. Now, the second reason I believe it's happening is because the big guys, the Blackrocks, the Guggenheims, the Bridgewaters, they all want to get in. So maybe they're in cahoots with some whales to force this to happen again, to shake that Bitcoin free from those retail investors. The fourth reason, I think, is because of some rumors and FUD that were out there, that there was a tweet that the US Treasury Department was going to accuse a number of financial institutions of using digital assets to launder money. This is probably not true because the Fed doesn't prosecute, the FBI does. So that's another kind of big issue. Now, in terms of exactly what's going on, there's a lot of other items. There was a Bitcoin price collapse because of what happened in Xinjiang. I hope I pronounced that right. There was a big power outage which took a lot of miners out, which drove the hash rate down, and as usual, Bitcoin price follows the hash rate. Now it's back up to normal. So again, not a concern there. So there are many, many other reasons. So who's to say what's going to happen? But this was a great opportunity for people to get in and get a huge discount on Bitcoin. Remember, we were at 65K a week ago, and now it went all the way to 52K. So for those on Patreon that had their limit orders placed and were patient and waited, you guys crushed it. So well done, everybody there. Now, there's a couple of other things as well. If you lived through the 2017, 2018 downdrafts, they were typically 30%, and they happened often. We're talking every 4 to 6 weeks, sometimes even more frequently. So again, not a concern. Now, what has me even more bullish than ever before is the fact that Dalio, there's reports of this flying around everywhere since yesterday, and it made me very bullish, and it made me jump into Bitcoin last night, is he believes, obviously, he knows the bond market is in trouble, and he believes everybody should allocate 20% towards crypto. Now, when you think about that, that is staggering. Now, the old portfolio of the old days, i.e. last year, was typically have 60% equities, 40% bonds, but now he's saying everybody should just go 20% into crypto, and that's going to have an impact on the bond market. So, brilliant question, everybody. Don't worry, the macro backdrop is as bullish as ever. So again, do not be concerned. Okay, second question is from Robert Rodick. What is your mix of crypto portfolio? And he basically said what his mix is. So my mix hasn't changed. It's fundamentally the same, but sometimes I got to rebalance. Let me walk you guys through a few things. First of all, I'm about 75% Bitcoin, about 24% Ethereum, and 1% Cardano, just in case Cardano nails it and Ethereum implodes. That's kind of my little Ethereum hedge. I have a little bit of ENJIN coin and a little bit of BNB. Now, when I say a little bit, I mean a little bit compared to the other positions. Now, what I do is I tend to rebalance. So what's happened lately is Ethereum has been on a big flyer, and that meant I was actually much heavier in Ethereum. Therefore, I bought a little more Bitcoin to balance things out. And that'll typically happen because When Ethereum and Bitcoin are on a run, two things happen. One, Ethereum sometimes lags Bitcoin, but if you look at the past 12 to 14 hours, they are in lockstep. I mean, 2 fractions of a percentage. It's been uncanny, but normally Ethereum lags Bitcoin. Second of all, if Bitcoin goes up a 5x, Ethereum will go up a 7x. So therefore, Ethereum runs faster, but it also has a higher beta, so it falls faster. So you just got to bear that in mind as well as you go forward. So that is kind of my portfolio. And another very interesting thing I just want to intertwine here as well is Cathie Wood came out recently and said that Bitcoin is highly correlated to real estate. That is the most correlated asset. So that took me by surprise. So think in terms of, as you balance your portfolio, and if you look at my video from a few days ago about asset management and rebalancing of portfolios, you'll see how important that is. But now that you know the correlation between those different assets. Okay, so third question is from Rob Edwards. Do you think Bitcoin will lose 90% or more of its value after the bull market and into the crypto winter? So first of all, as I've said a few times before, I think the crypto winter will not be as harsh this time around. And I mean that for a few reasons. First of all, the impact of the halving is half, so it's not as pronounced. Second of all, the first crypto winter, it was all retail driven. Now we have high net worth individuals, we have sovereigns, we have institutions, we have insurance companies. And these people are hodling Bitcoin as a hedge against inflation. They're not trading it. So they're buying it and they're taking it off the exchanges. So the amount that's available to actually sell during a crash is limited, and there's an unlimited supply of people that want to come in and buy. So I don't think it'll be that bad. Now, in terms of actual specifics, I think in terms of downdrafts, we just went through one. The maximum downdraft from top to bottom yesterday was about 11.84%. So it's not that bad. We had, again, as I mentioned before, 30% downdrafts in the last bull market. So you can even see the downdrafts aren't as bad, but people freak out nonetheless, but they freak out unwarranted. And I always say, buckle in, ride it. The big picture is great. Think 2, 3, 4, 5 years out. Bitcoin will be very, very high. Now, big well done to everybody who was strong and had their limit orders in and had them strategically positioned, because you all got really good fills. And a week or two from now, this will be a thing of the past. You won't even notice the blip. So in terms of the max fall, in order to answer your question with specific numbers, if Bitcoin goes to 100, which I think is very achievable because we're very close to that already, I think the max downdraft will be 40 to 50%. So it'll take us down to, say 55K, kind of where we are now. That could be the new floor. And people like Willy Woo said 54K is the new bottom as far as he is concerned last week, but we just dipped below that. But it was a very short dip. It was a quick wick. So those things will always happen. But remember, just watch the buyers come in when they do dip down. The second thing, if we go up to $200,000, for example, I believe we will fall down to, again, same thing, about 45%, maybe down to $110,000. So don't worry about that 90% thing. That's a thing in the past. It's not going to happen anymore. So thank you for the question. Question 4 is from Mike C. Oh, we're going into biotech. Yay. So Mike C said, you were very bullish on Invitae a month or so ago, and I haven't heard you mention them lately. Are you concerned with their recent insider trading? I'm assuming that's why the stock price dropped and has not really recovered. So I got into Invitae about 38.5, and it's been floating between, say, 36 and 42 for 3 or 4 weeks. And people can be very impatient and they want big returns fast. But this is kind of a long game, and the whole biotech sector has been hit bad by a whole bunch of reasons. So it's not just Invitae, it's the whole sector in general. It's even people like the ARC genomic fund as well has all been hit. So it's not bad. But first of all, I believe the future is personalized medicine. I believe molecular diagnostics are absolutely critical as we go forward. And what Invitae are doing is they're paying it forward. They have an extremely high margin business, but they're investing in their AI and building out their data platform. And that is what they can monetize in the future. Now, there has been a little bit of insider selling, but if you look at it compared to things like other companies, I'm not that concerned. They had a little bit of dilution as well. Again, not that concerned. But this sector will define the future. And I remain completely bullish, and I see it going way above $40 soon. But I was thinking it's that kind of 6 to 12 to 18 month time frames, not week to week or day to day. Okay, thank you for the question. I think that was from Mike C. Question number 5 is from capital D, capital T. And the question was, so if I never sell crypto for fiat and wait until it starts being widely used for everyday purchases, that means I'll never have to pay capital gains on any crypto investments. So no, that's not true. And I hate to burst your bubble. So if you imagine one of the things I did, I put some money into PayPal right before they started trading crypto, and I used that to buy Ethereum and Bitcoin. And that little amount of money has gone up a great deal. And I put it there because I have an eye to the future and to be able to use that money, which appreciates much more than fiat in a bank account, to be able to buy things from over 30 million merchants around the world. They are the merchants that actually use PayPal. Cryptocurrencies in the eyes of the IRS are treated like property, so they are subject to capital gains. Now this may differ in different jurisdictions around the world, but just use this as one example. Now imagine Jim wants to buy a piece of furniture from a PayPal merchant and the cost is $55,000. But he bought his Bitcoin in March, which is 13 months ago, that's important for the story, for $4,000. Now he buys that with his Bitcoin. What PayPal do is they convert it immediately to fiat and give the merchant the fiat. They're not actually at the stage where the merchant can actually receive Bitcoin, but I think that's coming very soon. So if you imagine that situation, Jim pays for the furniture, it gets converted. Now, under the eyes of the law, it's the individual's responsibility to actually pay taxes to the IRS for this transaction. And just because it's over 13 months or 12 months since that happened, it's subject to long-term capital gains, which is very important as well, because it's a lot less than short-term capital gains, particularly if you're in a place like New York or California. And as a result of that, they will have to pay, say, approximately 15% of that $51,000 gain, which is about just under $8,000 in taxes. So that's how that works. Now, if you start buying things like Starbucks coffees and sandwiches and lunches with crypto using your PayPal account, that accounting headache could be really mad. And there's another item as well to consider as well for you all, is what I call FILO. So first in, first out, first in, last out. You've got to also understand and look carefully at your tax jurisdiction for how they manage which crypto you're using. So if you bought crypto, for example, at $4,000 13 months ago, like Bitcoin, and if you bought it yesterday at $55,000 and you use that same, like which coin did you use to buy the furniture? That's critical. So if you use the 55K one to buy the furniture, technically you're not incurring any capital gain. So that's a good thing. So anyway, another thing to think about, talk to your tax accountant. I'm not a tax accountant and I'm not giving financial advice. So just edutainment. So thank you for the question. Okay, question number 6 is from SAKAICHEWY. I hope I pronounced that right. What's your opinion on the stock market crashing in the next few months? So first of all, as everybody always says, don't fight the Fed. There's too much money flowing in and they're just keeping things very, very inflated. So I am a little bit concerned with the very high multiples, but then again, you have to also take into account the low interest rate. And this is a new world where actual PE ratios and multiples are a little bit different and measured differently as we go forward. We're also in an inflationary environment, and because of technology changes, we're actually also in a deflationary environment. So it's a weird kind of balance. Now, if you look at a couple of things, over the last 5 months, there was about $569 billion in inflows into stocks. And over the previous 12 years before that, there was $452 billion. So there's so much money being pumped into the stock market, and that's going to keep it inflated. Now, also, if you take into account the hurdle rate, many people say it should equal at least the inflation rate, which is said to be about 15%. Even if the S&P 500 goes up 15% in the year 2021, that's technically break even from a purchasing power perspective. So you're not even incurring any gains in terms of US dollars because the S&P 500 is denominated in US dollars. So it's very important to think of it in those timeframes as well. So I don't see the stock market crashing because there's so much money coming in, and also the US currency that it's denominated in is being debased. So there will be fluctuations, however, but I don't think they'll be that bad as long as the money keeps getting printed and we're printing ourselves into oblivion. Thanks for the question. So question number 7 is from Larrie Solarie. Can you achieve getting 1 Bitcoin without getting 1 coin all at once? Yes, this is the classic dollar cost averaging idea, stacking Satoshis, etc. However, it's very important to know it gets more expensive as each day goes by. So imagine summer in March last year, $4,000. Summer, $9,000. October, $10,000. And then on and on and on. January 1st, I think it was $29,000. Last week, $65,000. So the longer you wait, the more expensive Bitcoin ultimately will become. So it's important to, if you are considering getting some, try to get in as early as possible, because over time it'll just get more and more expensive. But yes, start allocating what you can, make sure it doesn't exceed 5% of your investable assets, and stack those sats. But remember, if Bitcoin goes to $100,000, which many expect it will, or even $200,000, and you have allocated, say, $50,000 towards Bitcoin to get to that 1 coin, it could be twice or 4 times more expensive very quickly. So again, not investment advice, but time is of the essence. Okay, question 8 is from Thomas Dreher. Your thoughts on the influence on the crypto market when China goes live with its digital currency, or even the US with digital currency? So CBDCs, central bank digital currencies, I believe, are a Sputnik moment. Everybody is clamoring to get one as quickly as possible. It's like a nuclear arms race, and it is kind of terrifying. Everybody wants to catch up with China. They have the first mover advantage. They say their digital currency will be prevalent and live by the Olympics. So it's a scary time. If you go down the rabbit hole of what a digital currency is, it's kind of scary. Now, I'll talk a bit about that in a second, but I think China will use their digital currency as a hammer, especially for emerging nations. Like if you look at the prevalence of Chinese corporations and industry in places like Africa, they're buying up everything for natural resources and everything else. And these emerging nations will be forced to take this digital yuan, and that will displace the US dollar as a global currency. So that is one concern. Now, the other thing as well, China are very focused on displacing the US dollar as a global currency, and they will definitely chew away at that position, I think, is a big stretch. But what I really don't like about digital currencies is they are a surveillance mechanism, they are a control mechanism. At any stage, the central bank can confiscate, shut off, control, whatever, your money. And I think, as I always say, people will start gravitating towards things like Bitcoin because nobody will want their money, their precious dollars controlled, or their precious yuan. In fact, there's even rumors in China now, people are, when they can't buy Bitcoin, they're buying other things that they can use to barter in the future. So thank you for the question. I'm really worried about that, and I think it'll be scary, but the next couple of years will be very transformative. So, question number 9, fun question of the week. So big thank you for this. This is from Alan Lee. What is your favorite exchange to use and why? Okay, so I use a lot of exchanges, and they all have different purposes. It's like having a whole bunch of tools in your tool belt. So first of all, the one I've been using for more than a quarter of a century, and I'm very familiar with it, and they give me everything I need to do what I want. And we're talking futures, options, really good margin terms, etc. Special tools like Thinkorswim is Ameritrade, and that's where I do all my equity options trading. Now, in terms of my favorite thing about Ameritrade as well is they got this very cool view of my portfolio from a Greek's perspective, so I can see all of my Greeks across all my portfolios and how they play out, and that's a very important thing I like to look at. The second one I use Coinbase Pro for crypto trading. I also have Binance and Voyager for different types of tokens that I want to get a little piece of. And finally, believe it or not, I like, when I'm going to check out real-time quotes for Bitcoin, I use Robinhood. I really like their real-time chart. So thank you for the question. Hope everybody's well. Be safe, buckle in. This is the Cryptoverse. And don't be concerned. Just stay the course and think long term. Thank you, everybody. Have a good weekend. Oh, by the way, we just broke 100,000 subscribers. So love you all. Thanks for all the support. See you soon. Bye.